TraderXO, can you hear me?
Steph, I can indeed, yes.
Hey, sorry about that. Go ahead and share your screen. We are just about to go live, by the way. And
That's
to
okay.
all of our excellent viewers out there, to all of the people who have been waiting for this stream to start. Yes, we're about 13 minutes late here, but not to worry because we've got a great stream for you. And TraderXO and I were just chatting and we thought we were live for a bit there, but it turns out we weren't live on this exact stream, but here we are. So good to have everyone. And TraderXO, you can hear me loud and clear, right?
I can indeed. I can indeed.
Great. And your audio is coming through nicely as well. So before we kick it off, and I see you've got a great chart up here of the total crypto market cap. By the way, that's an epic level that we're looking at. Double tops have never really worked well in my trading strategy, but that catches my attention. But before we jump into these charts you've got prepared for us, let me make sure I get the intro going for all of us. So ladies and gentlemen, welcome back to our TradingView live show. This episode is proudly presented by OKX, the world's second largest crypto exchange by trading volume and a connected broker on TradingView. Now, many of you are aware of this already, but you can connect your brokerage to TradingView, which gives you the capability to analyze charts, as you're going to see in this live stream, and manage or place trades. Now, in this video, we have a product partner from OKX, TraderXO, joining us, where we are going to focus on trader education, market research, and all of the charts that he's got prepared for us. A quick background about TraderXO is that he's got a background in computer science and years of experience working on trading systems. He entered the world of trading in 2016 through Bitcoin and expanded into broader crypto and FX markets. By 2019, he transitioned to full-time trading, and now you can find him on X and YouTube, where he does quite a bit of live streaming. So that was a long intro. We got to jump to the markets. TraderXO, good to have you here. Good to have OKX here. Why don't you kick this show off with this chart you're looking at? And if you want to add anything to that intro, please do.
Yeah, it's great to be on the stream, and hello to all the viewers. And a big shout out to TradingView team and OK Exchange for today's event. So yeah, let's just kick off. I think, look, we've just had the excitement with the elections, with Trump being elected, and the market is obviously taking very well to that. We saw rallies in equities, but really crypto has captured the mind share in terms of where I feel we are now on the risk curve. There seems to be a larger appetite for crypto assets, primarily from a trading perspective. We've seen some phenomenal moves happen on Bitcoin, breaking out into new all-time highs. And even now, looking at the total market cap, it's very much at the previous all-time highs of 2021. So what a journey it's been, right? Since 2021, we've had the bear market crash in 2022. We had this period of sideways and consolidation for the best part of a year and a half before, last October, the markets really took off into Q4 and continued in Q1. We've had a corrective move for the best part of, throughout Q2 and Q3, and then the start of Q4, which I personally saw as very good buying opportunities to position into the market. And so far, it's been really exciting. I think we're in the fun phase of the crypto market where, you can see some serious expectations to the upside, not only just on Bitcoin and Ethereum, but especially for those of us who enjoy trading altcoins. So yeah, exciting times ahead into the year end, no doubt. So I think it's one of those phases where it's going to capture a lot of media attention, and certainly all eyes are going to be on crypto, I feel, over the next few weeks and months at least.
And I'll say this, with Bitcoin, I think hit tag 90K this morning, and now this chart you're showing, which I didn't actually look at until you pulled this up. So maybe explain to people what this chart represents, what the total symbol is, and what's going on, because that is fascinating. I've not seen that. I follow quite a few traders on X myself. I haven't seen this chart come across my feed just yet.
Yeah, so the total market cap is essentially the total market cap in terms of dollar valuation. We're at nearly at the 3 trillion level. The amount of money of weighted total market caps in the crypto space, as per those markets which are being tracked by TradingView. So I think what this really does is just it gives me a holistic overview as to what the overall state of the market is from a high level point of view. I think generally how I use this is just to get a good idea, like it's the holistic 10,000 foot view of what's actually happening in the market. This captures Bitcoin, it captures Ethereum, captures various altcoins, stable coins as well. So I think it's just a great way of looking at what's happening in the crypto space. And yeah, I think it's really exciting that we're poised at this all-time highs. And I think the expectation for me is, look, we've had 6-7 months of consolidation in a range-bound environment. At what point is Bitcoin going to continue going higher? And at what point is total market cap likely to expand? And if you look back at previous cycles, where we were maybe 7-8 years ago when I first started in the crypto space to where we are today, I'm just looking for the logarithmic chart. There we go. And if we can just put this on the monthly time frame, perhaps. If you look back to where we were at the heights, well, let's just start off with the lows. It was literally a $3 billion market cap in 2015. And I remember joining the crypto space back in the summer of 2016, where it was just a $12-13 billion market cap, topped out at 800 in the peak of December. And then the previous cycle from 500 billion to 2.7, 2.8, nearly that $3 trillion level. We can see that every time we've broken the previous highs, the market does go on to expand. I'm sure there's going to be an element of diminishing returns, but the way this is setting up and the way this is shaping up, it looks likely to me that we will see eventually, barring any shallow pullbacks over the coming weeks, that we will see continuation higher. And I think that really adds to the fact that there's a great level of excitement and opportunity over the next several weeks, at least heading into the year end in the crypto market. So yeah, like I said, I'm very, very excited as to the opportunity that lays ahead in front of us.
So I have to say, just in terms of market history, I think it's so interesting just for you to point out that the total crypto market point at one point was 3 billion. And now we are on the verge of, potentially going to 3 trillion. So what an enormous run. And especially after the election, just how quickly that happened. What are sort of your, you and I were just briefly chatting about this before we went live. What are your thoughts on the speed of the move? Because that really caught my attention. You don't see moves this big at this market cap happen this quickly often. So might be interesting to share your thoughts on that.
Yeah, I find that if you look at Bitcoin generally in nature, let me just bring up a slightly different chart that has more data set. And if you just look at the overall, just a structure of Bitcoin, it just, from time and time again, it does it ever so often where you have these periods of range-bound environments and the market just takes off, consolidates, and just takes off. And if you look at the acceleration point, I feel as though the moves in crypto happen very, very explosive and over a period of 6 to 12 months, where majority of the moves are in a matter of 6 to 7 weeks, consolidation for many, many months, a range-bound market back into a trend. So even looking as far back as August, let's just go to when we had the breakout above 14K. That was in October. It rallied significantly from 13K all the way to 40K in a matter of 6 to 8 weeks. Consolidated for a few months, and then we saw the extension higher, followed by a level of distribution. And again, if you look at this current cycle, we've had this range-bound environment for the best part of a year and a half, but when it does move, it moves very, very aggressively. Again, we had the QRA announcement back in October 2023, which kind of propelled not only Bitcoin higher, but equities, NASDAQ. And you can see the move that we've had from 25K all the way to 40K in a matter of 6 to 8 weeks, consolidation for a month or two, continuation higher. Then we've had this fairly significant range-bound environment, which many assumed or perceived to be a distribution top. There was concerns about a break of market structure. There was concerns of, has Bitcoin printed what is almost considered to be a triple top? But the fact that we've been range-bound for 8 months, failed to break down below this 55K level, 1, 2, 3 attempts, I think that signified for me back in September that this is going to be a very good buying opportunity, which is what I covered on stream. And so forth, we traded back to the range highs and we saw that continuation pushing up higher now. So again, I think the thing with Bitcoin is one thing that I've learned over the years is that when Bitcoin moves, it moves very, very quickly. And not only that, it kind of exceeds expectations to the upside. And equally, when Bitcoin sells off to the downside, it goes much further than what one can generally anticipate. So really, the trends are fairly aggressive. And I think that's part of the reason why Bitcoin really captures this mind share in the media. We see these significant moves in a matter of days or weeks where price can instantaneously go up by 30, 40, 50% in a matter of a month. So I think that's the excitement that Bitcoin brings to traders out there who are seeking volatility to trade. But yeah.
I have to say on that is an excellent point from the standpoint of I see some commentary about the speed of this move, but actually, if you look back at Bitcoin's history, it has sort of this sort of repeating nature of moving quite quickly to the upside. It almost, it's actually not abnormal for a move to happen like this quickly at this size and scale. So definitely interesting. And what lines do you have on the chart here? What have you drawn for us?
So basically, let's talk about trading concepts. Generally, we know that markets do one of two things. Either markets range or markets often trade in a trend. We know that generally 80, 90% of the time markets are range bound, and the 10% markets break out of a range and go into a trend. So one of my strengths as a trader is essentially range trading, where I'm looking quite often to trade the extremities of a range. So let's just do a slight education. What is a range? What compromises a range? So the crux of it is, or the absolute foundational level of trades such as this, you generally have a range low, which is a level of support, or we can call this a demand zone. And equally, we have a range high, which can be deemed to be considered as resistance or a supply zone. And this is where majority of the time price will oscillate from the highs to the lows, back to the highs and lows and so forth. And in between, we have this key pivotal point, which I refer to as a mid-range. That is essentially the essence of a range, right? And in my personal opinion, from my own trading experience, this is how I've kind of built a strategy around this. And I hope I don't lose many traders when I explain this in further detail. But essentially, when I'm looking to do business, and like I said, you often find price trading from one extreme to the other. And it's around these range highs and range lows, or the midpoint, where I'm looking for inflection points. I'm looking for trading opportunities, because what I don't want to be doing essentially is trading in the middle of nowhere. And this concept can be applied across any time frame, whether you're a day trader, high time frame trader, intraday trader, positional trader, and so forth. And essentially, the strategy that I trade is, look, it's very, very simple. It's such that if price is coming in towards the range low, I'm looking for any swing failure or a fake break of the range, where you often find breakout traders trying to trade this or short this to the downside. They often get trapped. Price pushes back inside the range. And then generally what you see is not only do buyers start stepping in, these shorts are then forced to close, and you get that aggressive expansion away back up, where price oscillates back towards the mid-range, which is generally where I try to identify my first level of take profit. Sometimes we get a rejection where price can break back down again and pull back, or it can continue on going lower down. So that's why one of the reasons when I trade levels, ranges play a key part of that, where I'm looking for a reason to execute or a trigger point at this zone, targeting the mid-level, the 0.5, looking to take profit. Now, the question is, well, XO, what happens if price continues going higher, but you've taken profit at this level? It's very, very simple. At that point, I've got a clear trigger point ahead of time, such that if I know price pushes up into this level, okay, I've taken profit, we get that correction, that's fine. Once I see strength of acceptance back above the mid, my stop is generally at the low of the mid, and I'm looking for continuation higher. What this gives me is the fact that, one, I can lock in the gain from A to B. Two, I'm not suffering significant drawdown or hoping for price to continue higher, yet I'm suffering in drawdown. So therefore, by taking profit at this level, I can then decide, okay, what's the next call of action for me? What's the next trade setup? Is this likely to be a strong level of resistance where I can now look to short the market with the stop at the high? Then I'll take that trade. And equally, if I'm wrong on the short idea, I know my validation is just above the mid. Price finds acceptance back above. I can cut the short, look for the long environment for as long as this level holds, stop at the lows, taking it to the next level from A to B again. So really, essentially, capturing the possibility that price comes into the range lows, traps any traders, or there's a deviation, looking for a long trigger now that we've had a fairly extensive move on the way down into a level of demand, Price now gives me an opportunity to look for longs. First objective is here. Second objective is the range high over 2 trades. It just gives me flexibility, and I found that by being aggressive in profit taking from one level to the next, it gives me a significant amount of control. And it's the same on the way up as well. Assume that price is reaching a level of resistance at the range highs. It's the same concept where now, inversely, as I've described for the buyer side, you're often going to get price rallying to the highs, and what you find is that there's a level of supply, and late market participants are buying this on the way up. But price is finding a level of exhaustion into the supply zone. And again, what I'm looking for is some form of rejection, whether it's a swing fail of a previous level or whether it's just a rejection on the underside of the level to get back into the trade, looking for price to oscillate back to the median of the entire range. And that's kind of the concepts of range. And where the trend aspects come into play is fairly similar. It's whereby, look, we know that quite often we see failed breakouts. People start longing this and they get trapped. That's essentially the essence of range trading. You're looking for liquidity pockets, you're looking for traps, you're looking for unwinds or delta positioning, and looking for people to puke out their positions. But when you have, say, a level that's been tested once, twice, maybe 3 times, then what's the probability that price, when it goes up there for the 4th time, that it's not only just going to be a fake break, but it's going to show continuation higher, breaking out into a trend. And that's where you get those aggressive moves up. And if we just take a step back on Bitcoin, I'll just map out essentially what that range would have looked like. And here's an example that I've got of what I covered on the stream previously. So the previous range, if we just bring it back in time with the replay tool on TradingView, you can see that price attempted these highs up at 73K. We broke past the previous all-time high, but failed to find acceptance above that level for any prolonged period of time. If you look in the weekly chart, you can see that how price, every time Bitcoin traded above the previous level, it got rejected. We traded above it, it got rejected again and again and again. So clearly that defines a level that's appropriate or can be considered as a range low. And equally to the downside, if we can just go into the daily chart, we can see that there is a demand zone here where price consolidated. So this was our previous trading range. Price broke out of that range, consolidated, never offered a pullback. But this was the consolidation which led to price rallying higher. And if you look at where price eventually pulled back into, it was that significant demand zone, which helped form the range low. We've had one test of the level, oscillated back to the mid, above the mid, and back down into the range lows again. So the way I then consider this, just from a trading perspective, if we can just remove some of these markings on the chart and give a clear example of this, that's the essence of a range where I'm essentially looking to do business at the extremities as a seller and looking to become a buyer. We've had price come into this demand zone, form a swing point. The next previous level was a swing fail, takes out this previous stop into this demand zone, closes back inside. That's the trigger for me to go long, okay? Anybody who is shorting this is now trapped and they're forced to puke as longs start piling in and price then reverts back to the mid. That's my first primary objective, to take profit. I can then decide, does this give me a pullback and show me acceptance to step into trade and take it higher? Or am I waiting for another pullback lower down into the range, somewhere in the bottom percentile, to consider a trigger to go long? As long as price doesn't break down from the range, this will give me trigger back to the mid. Any pullbacks, fine, I'll take some profit. Show me a reclaim. I'm stepping back into the trade to the range highs. And at that point, if we get there, then there's a very good chance that we've had several attempts at these highs. We couldn't push higher. Now on this attempt, the probability for me would have increased that we're likely to go higher. So if we just run it back and backtest this on the replay tool, and again, this was a setup that I covered in significant detail on my streams during the period of September and October, you'll see what happens hereafter. So price has traded the range low. At this point, I'm looking for a reason to execute my trade. Now, generally, this is on the daily time frame. How I execute is that I execute on the low time frame, whether it's non-time frame charts, whether it's using footprints or whether it's on the 1 minute, or 3 minute, or 5 minute chart, really zoning in on this level here. So essentially, I'm looking for price to start pushing away from this level, which it is starting to do, knowing that I can now mark up my stop just below these lows here. Essentially, what I want to see now is this level holding as a demand zone. I don't mind price pushing back into this level, but what I don't want to see is price breaking below, because then that kind of invalidates the probability of me being right on this range trade, where I'm now looking for continuation higher instead. So on the lower time frame, this is just on the 5 minute chart. I took a trigger from around about 54K. Once I saw the acceptance back inside the range, having traded into a demand zone or the range lows, now looking to work this back to the mid-range, so to speak. And that's kind of what we've got, several weeks later. If we just go to the 4-hour chart, or maybe the 12-hour chart as a better example to speed up this example here, you can see that price now trades back towards the mid. And eventually, this is where I generally take profit into this level of resistance. Again, look at the key pivotal points that we've had where price is finding a level of support at this zone here. Again, equally, this is our resistance zone. So I'm expecting some form of a reaction from here. The fact that we've moved in one direction up. Any rejection, pullback, acceptance back above increases the probability of being right. And just like I said, if I'm starting to scale out, I'm waiting to see whether I get the pullback and acceptance back above this key pivotal point to show me continuation higher, okay? So, and I remember this because I did actually take this trade from long, and I think I shorted the swing fail above this level, back below into this demand zone, waiting to take the long, getting the acceptance and trading it higher. And I believe that is essentially what happens. And again, I share these on my streams, share this on the timeline as well. We get the pullback into the demand zone, and this is where I'm thinking about at this stage. If price starts pushing back above, this increases the probability that we are likely to see price push higher over the coming days or weeks and so forth, back towards the range highs is where I want to see price going essentially. So waiting for the acceptance, get the acceptance, and then that gives me the probability that we're going to push back up to the range highs.
Well, let me say on this note, which I think is very interesting for also the discussion of Bitcoin and how we kick this off as well, is, I feel like it's often forgotten that range trading makes up a significant portion of actually trading. You're right. There's only so many times we get really epic breakouts, the upside or downside. But oftentimes when you actually look at a chart, there's these huge ranges that are existing. So this type of range trading education is really interesting to see. And I really like the midpoint. And I know you want to add more to this part of the lesson, but I just want to ask you one question that I was thinking about is the trapped trades. I find that to be so common, right? Where the prior low is breached and everyone suddenly thinks like, that's it. All the stop losses have been hit. It's going lower, but it just turns out to be sort of like a quick flush. And then, it's almost like a spike back higher. It's a trap trade. It's a fake trade. Curious to hear your thoughts on that as well.
Yeah, I think this is one of my key trading strategies. And I mean, what I've covered here is just the basics of price action, the fundamentals of price action, but really under the hood, using low time frame data points such as order flow, looking at footprints, you're looking at basically what's happening behind these candles. Where is there an imbalance of price? Where are there likely to be aggressive shorts opening into passive bids? And this is how I think about markets in terms of auction market theory, in terms of passive participants versus active participants. And generally, the concept is such that, look, if you have a large number of aggressive shorts opening at this level with the open interest increasing, but those sells have been absorbed by passive bids resting in the book, eventually at some point you have to expect that, well, if price starts pushing back up inside the range, at which point are you going to then have to be forced to close your trade out? Which means if you're short in the market, to close out the trade, you have to then open the opposite side of the trade to flatten out the short. And then the fact that you've got longs piling in because people see this as a potential swing fail or a deviation, and then you get those fast aggressive moves to the upside. And that's kind of a result of longs piling in, shorts getting liquidated, cascading shorts closing out, unlike a buyer stepping into the market. And hence why you always find that, well, I've certainly found that my strategies are often trading around these extremities of price action at the upper percentile and the lower percentile. Everything else generally in the middle is more for lower time frame trading, but I generally capture the bigger moves, trading the extremities. Now, like I said, this isn't just applicable on the high time frames. Excuse me. It's also applicable onto a 5-minute, 50-minute, 1-hour chart. So the foundations are such that price action for me sets the context. It's the foundation of everything that I do. But under the hood, I'm then looking at footprint data. I'm looking at perhaps, positioning, looking at levels of liquidity, looking at a heat map, for example, to show me where there's likely to be stacked bids across various exchanges, and using that information to kind of help me with my decision making. And the decision making part is, all right, I've defined the level, but I need to see what's happening in real time. Are the data points showing me that this is proving to be a very good trade setup? Are there likely to be trapped traders that are likely to unwind their positions? And is there enough for me to suggest that I can step into the trade with a clear invalidation and a clear target, understanding the overall context of price? So that's kind of the essence of range trading at the extremities. And I often generally don't like to trade in these zones here, if I'm honest with you, anywhere around here, because it's very choppy, it's very rotational for me. It's at the extremities and being very, very patient for those trades when they do set up.
And now going back to the recent action, and as we kick the show off, just speaking about like some of these post-election moves, what are your thoughts on the breakouts? Do you sort of just prefer to watch the breakouts unfold? Is there any process there, or is it sort of just sit on your hands and don't do anything because these trends they don't happen often? Right? We just discussed this range trading aspect. And one more thing on that as well is, which I'd love to get into after we cover the BTC chart, is even getting back to that sort of top-down approach we were speaking out before the live stream kicked off and some of the charts you've got prepared. But first, let's speak about the recent breakout, and curious to hear how you approach them after the range trading is sort of completed.
Yeah, so for me, it's very simple. The way I play markets is in two ways. So obviously, I'm a discretionary price action trader. And the two types of positions that I have is either a spot position, and those are slightly more positional plays, longer term plays, I should say. And when you look at Bitcoin, for example, here, if you look at the higher time frame, the fact that we've been in this range bound environment for the best part of 6 months, the fact that another strategy that I use is something known as the yearly open level, and using the yearly range, I should say. So again, another context, and this will be a nice segue into how I use, or how I've created some of my own TradingView scripts. If I can bring up XO levels, this is a script that we'll talk about scripts later in the stream, but and this is free, by the way, for anybody who wishes to gain access to it. You can go to TradingView, go to indicators, type in X and then 0. I don't know why I did 0 back in the time, but there you go. Click on the settings and you'll see that we have Monday's range, or Monday's high low, the daily opens, the weekly opens, and we've also got one for the monthly open. Now, in terms of the yearly, I know for a fact that the yearly open was at this level, but what I really wanted to pay attention to was the yearly range. This was the yearly low down here at a level of 38,000. And this high in March, around about 74, was the yearly high. Now, taking the mid of this, again, this is an example of ranges when and how I use that. And if you look at this in terms of the mid-level, was coming in at around about 56,000, and the 0.618 coming out at 52,000. So that, for me, proved to be a key pivotal point in my decision-making, such that for as long as this level holds here on a higher time frame contextual perspective, the fact that we never really found acceptance. Now, what I mean by acceptance is price actually closing below the level and showing continuation lower down. We had price test into that demand zone on the yearly mid-level, not once, not twice, but 3 times. And price was unable to break down. So therefore, as I stated earlier, if you think about ranges, if this is our mid and it's holding up well, or on the lower timeframes on the daily, this is our range lows, where's the objective for price to trade next from a contextual perspective? It can't break down. It's tried several times. The objective is then to oscillate back to the highs. So this is just basically based upon the contextual idea that this is a key pivotal demand zone on a weekly time frame On a daily time frame, it's the mid-level. So that's really using the higher time frame context. The fact that when you look at this from a contextual perspective, does this look like a range, or does this look like a trended market to you? This is a trended market. This is a trended market. When you see price oscillating back and forwards, despite the fact it was making lower lows and lower highs, market structure within the range can be very, very choppy. And I think there's a misconception which I saw, and that is that just because you have a higher low here and a lower low, another lower low, a series of equal highs, lower low, another lower low, lower high, and so forth. This could have been easily deemed to be considered as or classified as bearish market structure. But if it was, then you'd need to see continuation with aggressive volume and momentum to the downside, because that is essentially what leads to a trending market down. But the fact that we failed to break out of the range or this mid-level gave me the confidence of that once price starts pushing back above, that we were likely to oscillate back to the high. So that's, I hope that kind of answers your question from the high time frame context or the environmental context as to why I wasn't too concerned about Bitcoin breaking down until it actually happens, and why I was looking to be aggressive to trade this back to the upside here.
Absolutely. And there's a lesson there too for new traders, new investors, about if you mark your levels down and understand sort of, your perspective on the situation with just some really easy to see, simple levels. Well, in a way, you've kind of just started your plan. Now you can sit back and trade your plan. And there doesn't have to be too much, random guesswork, because you have now your plan right in front of you. And that's how you're going to approach markets. And I'm enjoying this educational lesson here because you've got these ranges drawn out. And that is a nice way to see, here's my range. This is what I want to trade. Okay, let's go. And then, of course, that breakout, it's just epic when it gets above that range there. Wow, just 90,000. But I'll say to that, you did bring up PineScript, and I want to shift gears a little bit here, because to me, this is actually a very important component. And there's a lot going on in markets, as we know, this 90,000 trade, the total crypto market cap chart we looked at, some of the top-down analysis. But I do just want to comment on PineScript really quickly, because I feel like the script you made is a really nice way to create something custom entirely for you, so you can see these levels that you want to plan around. Maybe speak a little bit more about that. I'd be curious to hear your thoughts, and I think there's a lot of people who'd be interested in as well.
Yeah, sure. So one of my favorite trading scripts is actually a strategy that I created. Believe it or not, it's very, very simple. It's based upon the 1225 EMA. And I'll talk about how I actually apply this. It's going to be in such a way that don't trade against the trend. And there's a few nuances to this, but if you look at the strategy here, you can see that the market on the weekly time frame, and generally where I like to apply this is on the weekly time frames, top down, using high time frame structures first and foremost. You can see that the market flipped bullish back in March, and that's again one of the reasons why I maintained my aggressive stance at these range lows. The fact that, yes, okay, price has traded below the 12 and 25 weekly moving average. The key is the detail here. If you, and this is why I love PineScript and TradingView, because of the strategies that you can spin up very, very quickly. But if we can just explain this strategy very quickly first, is that generally when you get the death cross or a crossover of the 1225, you often see continued weakness to the downside. Now, one of the reasons why this script played a big part in my stance in terms of looking for longs, positioning aggressively, looking for exposure on Bitcoin in 2024 at these range lows is, well, if this was going to break down, we should have seen expansion away from the bands, right? If you revert the chart, let's replay it back to this point here. One of the key indications of using moving averages is that if price is going to roll over, you'll see expansion. But what you will find in these environments where there's a possible consideration for bullish continuation is where you have price. It trades below the bands, but it doesn't push too far away. It kind of remains relatively close to the bands. And when you see this type of structure and you see price push back above it, that's a sign of strength quite often, that we are likely to see continuation higher. And a classic example of that, if you just run this forward, again, you can see price now starting to push back above the bands. Back test the bands, holding a support before we see continuation higher. So using a simple set of tools or simple set of strategies like the 1225 EMAs coded in PineScript really can help you to think about your trading and your strategy and your approach. And again, the same could have been said on SPX. If we go to SPX back in October 2023, you'll see a very similar structure there using the moving averages. Just waiting for the chart to load. Again, when you look at the bands, price traded below the bands, but it's very, very short-lived. Notice that there's no real expansion. And where did price come? It came into a level of support. And when you see this, when you see price find acceptance back above the bands and it holds level, you've got to go with the flow. You do not want to be trading against the trend when you see this shift in momentum and this level of acceptance of price now trading back above the bands. And that's essentially what's happened on Bitcoin. Even if when you look at Ethereum, another example here, again, we're just waiting for the bands to load up. You'll see when price broke below the bands. And now if you look at this, this is a great example. The fact that the bands haven't crossed bullish just yet, but it's with momentum and velocity pushed back above. So the consideration is that if you look at the time period, when these do turn around, you essentially want to go with the momentum. Unless the one caveat being is if you're in a range bound environment where you will get periods of chop and consolidation within a range bound environment. Now, in terms of the actual script, this is the beauty of it. It's actually a very simple script when you look at it under the hoods. And this is a slightly more advanced version, but coding these types of strategies in PineScript are very, very powerful. And I think when you look at the suite of tools that are available in PineScript and what you can do as a trader, and talking about my own trading journey where I've been a trader for almost 9 years, I'm at that point in my trading career now over the last year or two. I'm trying to remove parts of discretionary aspects out of my trading and looking to automate those. So a classic example of that, or something that I'm working on, is using dynamic ATR bands, which trails price when price goes up up or down in the direction that I anticipated for a given trade that I've taken. And what that essentially does is by trailing price, I can switch on the strategy. And if price does push away from my target or comes back against me, I don't have to be monitoring the position all the time at the desk. I know that price can trade into the ATR bands, whether it's a first standard deviation or a second standard deviation, and take profit for me automated. So I'm trying to extract the human element of trading into a semi-automated, partially discretionary aspect of trading. So that's something that I've been working on, something that I'm thinking about as I evolve as a trader. And the other part of PineScript that I think is really great, it's the language has evolved significantly over the last several years. There's great resources. And I think if I just give you an example, if you look at this pane here, which I sometimes often use, it's slightly more complex. You've got a market profile tool built within TradingView, which you can put together. You've got VWAP bands, you've got liquidation levels, you've got cumulative volume profiles. So many of these tools and indicators, and you can really create a really fantastic trading system for yourself, you leveraging basically what is available on TradingView. And I think one of the key aspects is that how it's personally enhanced my trading experiences and how it's enhanced my decision-making ability. And sometimes it can be the simplest of scripts, such as this, which is a 1225 EMA. It just gives me clarity as to where price is and what I want to be trading and in which direction do I want to be flowing from a contextual perspective. So I hope that helps. And again, when you look at this, when you see the bands pushing up higher, you really want to be questioning at which point or why would you even consider shorting this when we've had a range environment push out into a trending environment. And the bands pretty much are doing the horsework for you, the legwork for you, telling you not to fade the trend until there's a clear shift in context. So simple tools, simple strategies that can really help you visualize and understand the contextual environment that you're in as a trader.
Love that. And the aspect too of using PineScript, I think, to create a system that works for you and your process is just one of those things that I'm finding that more and more people could really benefit from, because you can create something that is entirely custom to your specific process. And that walkthrough is super interesting, especially connected to the range trading and the recent breakout. Now, how about some of the other charts that, well, actually, you know what I'd love to discuss before we get to the other charts is, you mentioned your journey in trading. I'm really curious to hear if there's any sort of lessons that come to mind throughout your journey. And naturally, 9 years, you've probably learned a lot, seen a lot. Anything that sort of just like sticks with you, though, just endlessly to this day that you'd like to share, especially with all the new traders out there watching?
Yeah, I think trading is a very, very tough journey, without a doubt. I think when I first started out, it's a huge mixture of emotions, because you have real capital on the line, and it's a very, very steep learning curve. And I find that if you don't really have any clear strategy or process, it's very difficult to make it in this game. It's only until you really sit down, and the one question or one statement I always make to aspiring traders is, if you've got a trading strategy, or if you're a trader, and if you can't explain or break down your strategy to somebody else, then how do you even know who you are or what your system is as a trader? Are you purely just trading upon chance, with no real understanding of who you are as a trader? And that's one of the key things. And I think the minute I did that, the minute I sat down after making so many mistakes in my early days, was sitting down, studying technical analysis, price action, understanding risk management, understanding the mindset behind trading, the reason why discipline is required. Once you understand that, then you've really got to kind of play around, poke around, like, who are you as a trader? Are you a day trader? Are you a swing trader, price action trader? Which style suits you best? Once you figure that out, it's then understanding what type of trades do you want to be taking. Because to be successful as a trader, you can have a strategy, you can create a strategy, and that strategy could be fantastic. But the strategy is only going to be applicable, or it's going to only deliver results if you know which environment to apply that strategy in. And like I said, markets often range, and markets often trend. So you do need a few variations, a few varying strategies, whether it's mean reversion strategy that you want to trade in a trended market, whether it's a breakout strategy for a trended market, whether it's a range bound environment like I trade. Predominantly most of the time price remains range bound. So I'm looking to trade at the extremities of a range. It doesn't have to be in a daily time frame. It can be on a 1 hour time frame, and so forth. And I think that's the most difficult aspect of a trade is to really sitting down and treating it like a business. You really have to understand not only the foundations of price action, or whether you want to be a discretionary trader, but also the mindset, the discipline, the emotions involved. You have to go through a level of journaling. You have to go through a level of journaling your trades, not only just journaling your trades, but your mindset. If you're looking, and I'll give a classic example of this, how often do we find that as aspiring traders, we'll take 2, 3, 4 losses in a row, and then we get a really good trade setup. But because of the emotional baggage that we're carrying from the last 3, 4 trades, we're either going to oversize on the next trade to make up for the losses, or you're going to completely bottle it, because now your confidence has been knocked. You have this, again, keyword fear of losing, or because you've lost 4 trades in a row, you're now full of anger that you want to revenge trade and make up for those losses. So you really have to be able to reset after every single trade that you take. Understand what's just happened, what your trigger point was, what happened in the trade, what type of emotions were you going through. Journal those emotions. Did you act impulsively? Did you take the trade accordingly? Or maybe you set out for a trade. You planned the positions, you knew exactly where you were going to buy, but the minute price came into your level, you froze. Why did you freeze? Is it because you're oversizing? Would you have taken that trade if you had less size on that position? You probably would have. Maybe you took the trade on, but you didn't get the size that you wanted. Now you see price pushing away by 10, 15, 20 basis points, or 10, 20%. Are you now going to just irrationally buy more at market because price is 20% away and you don't think there's going to be a pullback? And then when you buy more, higher, and now your dollar cost average price is all skewed compared to your original setup, the minute price pulls back, what are you going to do then? Are you going to close your position in a loss all of a sudden for what was a very good trading setup, but you failed to follow through on your execution. So trade execution is very important. And having the ability to reset after every single trade and looking ahead at the next trade, bringing the best version of yourself to that desk every single day is the challenge. And as long as you can give yourself a chance and remain disciplined, I think that's essentially what's been the key for me. And without going on for too long, I think one thing I've come to learn over the last 3-4 years, it's not really about how good you are technically in terms of price action or how good your trading strategy is. It's all about the mindset, bringing your best version to that desk every single day to execute your strategy that you've planned out, that you've built, and sticking to your plan and becoming very systematic in your methodology of trading and sticking to your rules and making sure that your losses are always kept small, because you can go on a spree of 10, 15, 20 brilliant trades, but that one trade, that one chance is what could essentially wipe you out, I feel. And we see that in crypto, people over leverage and blowing out on the way down. So, it's just having that element of discipline that I think is way more important than just the technical aspects in themselves.
And on that note, we actually got a question in the chat. There's been a few questions flying in, but I haven't wanted to sort of interrupt the process because I've been enjoying the educational walkthrough here. But one of the questions is, what are some of the biggest struggles you have overcome in trading? And I think what's interesting about that question is I think you and I were chatting before and you had some early trading experiences with Bitcoin, right? So maybe you want to answer that question. Curious to hear your thoughts on that.
Yeah, I think one of the main struggles with trading is essentially the first 2 years are very, very tough because you're trying to understand price action if you're a discretion trader like I am. I mean, you could be a systematic trader, which is algorithmic, that's coding based, that's completely different. I don't really have any knowledge of that side of the markets. I'm just purely a discretion price action trader. I think you have to give yourself time in this game. And I remember when I first started buying Bitcoin in 2016, trading altcoins in 2017, I did phenomenally well. Come 2018, I suffered a significant drawdown. I think I took something like several Bitcoin, close to 100 Bitcoins in 2017, only to suffer, a 70, 75% drawdown in 2018. And it's only then that you realize the importance of risk management, of discipline, that you can't have, I mind my language, a carefree attitude or a fuck it attitude, because that's essentially what's going to cost you. One bad mistake, one overexposure in a trade, and that's what's going to cost you. And I've done it. I've blown many accounts in my early days. I've oversized because I didn't understand what position sizing meant. I didn't understand the concepts of risk management. I would often load up an account and put 30, 40% position size on a single trade. And this is all part of ignorance and understanding of what it means to be a trader. Anybody can trade. Anybody can throw a chart up. But what does it mean to be a trader? And that keyword is a trader. It's not just about how technically good you are or how technically proficient you are. It's every single facet and aspect of trading. Your knowledge, your information, your risk management, your discipline, your emotion, your journaling process, And if you can't track your journey, if you can't journal, how will you ever come to understand in which environments and in which strategies are the ones that you perform the best at and the ones that you perform the worst at? And like I said, it only takes one process or one strategy for you to find a winning formula that you can trade again and again and again and again. And eventually it's a numbers game. It's a game of probabilities. It's screen time. You can do as many trading courses as you like, but there's no substitution for screen time. And I used to be at the desk 16, 17, 18 hours in a day, 5-6 hours of sleep. Sometimes I'd be emotionally attached to the screen because my position size was fairly significant. So you've got to understand at what levels are you operating at? At what levels are you emotionally in control of yourself, in control of your trading? And I think from an experience point of view, look, I started trading in 2017. I quit my job in 2018. It was the worst year for trading. I suffered in drawdown. I realized that the pressure was on me as a trader because not only had I quit my job, which was paying me fairly well, I'm now under pressure to trade for a living. And that's when the reality sets in. And that's when I thought, I've got to take a step back. I have to go back into the workplace to bring some income in. It takes the pressure off me from trading. But at the same time, having experienced what I have in 2016, 2017, and 2018, or the latter parts of 2018, why don't I now sit down and make a system for myself? I created a trading manual, which is 70 pages long. It talks about who I am as a trader, what I aspire to do, what type of markets I want to trade, what type of trading strategies I'd like to trade, what's my annual target performance, what's my max risk drawdown per week, per month, per year. How am I looking to journal those trades? What software am I going to be using to trade? And so forth. And then obviously going through a journaling process, a structure. Now I finally have a structure. Every Sunday, I sit down at the desk. Sundays are my favorite days now because I get to sit down. I look at the fundamentals, I look at the macro, I look at the charts, and I mark down which trade setups I'm looking for at the week ahead. Which markets am I looking to trade? I'm only looking for 2-3 trade setups in a week with high probability, with high conviction, risking 2-3%, or whether it's a spot play, risking 10-15% of my portfolio in a longer term position. So, it was only at that point where now that I'm working full time, I'm taking 2-3 trades a week. I'm marking up levels on the chart. I'm putting myself through a smaller account, a 10,000 trading account. The point I'm trying to prove to myself is, can I take this 10,000 trading account to 20, and then from 20 to 30, 30 to 40, 40 to 50? I'm not even thinking about 10,000 to 100,000. I'm thinking in small incremental steps. And not only that, assume I trade the account from 10 to 20,000. Mentally, and even journaling, I'm thinking to myself, right, now that I've got to 20,000, I do not want to see this trading account drop below 2,000-3,000. So that's a 15-20% drawdown in a matter of months. So staying strict to my discipline, understanding my weaknesses, understanding how to remove those weaknesses, understanding my strength, and focusing greater on the strengths that I have and building upon those, and just removing the weaknesses. If I've got a poor strategy, stop trading it. If you've got a high performance strategy, trade more of that instead. So understanding what your best setups are is very, very key. And eventually you'll start seeing results. You start getting a feel for the markets. You start seeing discipline. You should certainly journal, because there's no greater feeling. I know we shouldn't watch our P&L, but there's no greater feeling than watching your equity curve go up and to the right. When you see those big drawdowns, that's clearly an issue in your trading, because one, you've oversized. Two, there's a lack of risk management. So you're now going to get rid of those bad traits in your trading, those sharp, aggressive drop downs after weeks and weeks and weeks of gradual up. You get this 1 or 2 days which destroy all the hard work that you've done for the last several days or several weeks. And it's removing those demons out of your trading is essentially what will allow you to continue to progress as a trader. Just taking small wins, and every now and then you're going to get a big win. Every now and then it's okay to take small losses. It's just part of the game, but it's the big losses that are going to hurt the most. And I think once you understand that, just to finalize, the mindset changes. You don't think about trading this is me from my own experience. I don't think about trading in the sense where, right, here's a trade setup, this is how much money I can make on it. My first point of action is, right, I want to take this trade setup. If I take this trade setup, how much money am I willing to lose? Then I'll look at the upside. How much can I potentially make? Then I look at my strategy. Okay, what's the probability of this going up? I've planned the trade. Now we look at the trigger point. Where is it that I want to execute on the trade? And I gave an example of that. It's into this demand zone, but dropping on to the lower time frame. What do I need to see next? I want to see traders, aggressive market sellers, shorting the market into a level of demand or support. Let me just bring it up on the 4-hour chart. Okay, so again, aggressive short selling into these lows. If they get trapped and price pushes back above this level, this is my execution point. I can have my stop at the lows. Just to give you a high level example, looking for price to trade back to the mid level or close enough. So that's the whole process that I'm thinking. And as price pushes away, I'm constantly asking myself, what do I need to see as price evolves? What is it that I don't want to see? At which point does the trade become invalidated? At which point do I want to lock in profit? So kind of an evolving risk to reward as I'm in the trade, because I think one of the major mistakes that we make as traders is that once we execute the trade, it's entry, target, and stop, and let the trade play out. But I think you have to be more dynamic. I think your target has to be dynamic, and I think you have to evolve as price evolves as a trader. You've got to have this ability to read price and understand what's happening at every single point on the way up, and understanding at which point do you think the trade, or you might just fall short of your target. How much are you willing to give back to the market? So I think there's so many variations and so many aspects of trading that you have to understand as a trader to really refine your game. And it is a gradual, incremental process. Give yourself time. It's not going to happen overnight. It's certainly not going to happen over 2-3 years, in terms of consistency. I'm not talking about one trade where you've hit the jackpot and you've made $1 million from a 10,000 play. Do that 100 times. See how many times, if you can, the chances are it was a one-off. So trading is about consistency. And I keep saying this, I'm going to wrap up, but I'll say this much. I'm at that point in my journey now where at the start of the year, in my trading manual, I stated that for the next 200 trades, I want to journal every single trade that I take from 2024 January to whenever, 2026, 2027. But I must journal every single trade that I take. And according to my previous data, both qualitative and quantitative, over the last several years, the probability tells me that over a long enough period of time that I should go on to become very, very profitable. My profit factor is good. My Sharpe ratio is good. My win probability is fairly at 50-55%. So it's not a high win rate, but it tells me that the probabilities are aligned in my favor for as long as I follow my system. And if I can apply that for the next 200 trades in a disciplined manner, then I should go on to do well. And I think it's thinking in probabilities, thinking in that mindset, thinking in that long time horizon, not the next 2, 3, 4 trades, but the next 200 trades. Can you carry on repeating this process that you've now developed for the next 200 trades for the next 3, 4, 5 years and see where you are? That's kind of the final take that I would give on that.
Well, I have a lot to comment on in that regard. And I think we should let's keep the conversation going, because there was some good stuff said there, specifically the aspect too of how you started, and every trader goes through it. You blow up an account, you're too aggressive on a trade. I always am reminded that some of the best, hedge fund managers that you might see in the media are those with the largest assets under management. If you actually go look back and read about their history, you'll find that the majority of them will say, like, I blew up an account. It's kind of like a rite of passage. And I think it's really important that that's sort of maybe just spoken about a bit more in terms of new traders out there, because it happens. And literally some of the best traders ever have said that they've gone through tough times like that. You can actually even look at some of Warren Buffett's super early day investing background. He sort of comments he went through a really challenging time, which shaped his perspective and strategy. So learning from that is key. And the one thing I wanted to ask you about as well is you wrote a 70-page trading manual for yourself. I think that's really smart, by the way, just to have that. Maybe tell us a little bit more about that. That's pretty cool.
I'll see if I can actually bring this up somehow. I think I've got it on this machine here somewhere. Let me see if I can prop this up. So I've actually got even a mental trading manual that I created, believe it or not. So one of the key things that I focus on heavily is the mental side of trading. And again, here's an example of this, the trading mindset. I've been working on it. Oh, okay, what's happened here?
Yeah, we might be able to get that up on the screen.
There we go. So trading, I don't know if you can see that. Okay.
Yeah, we can't see it. We can still see the chart, but you know what? Maybe it's due for another follow-up call. We go through the this manual you've made.
I mean, I can probably toggle my screen very quickly and do it this way. Share this. Let me know if you can now see that.
Okay, let's see. Yep, it's right there. Let's do
it.
So
this is part of my trading manual. This is just the mental side of trading. So again, just looking at mastering trading, understanding emotions, what fuels performance, emotional signals. And one of my favorite topics and this isn't something that I've just created myself. This is from my own research of reading the mental side of trading, reading various books, and kind of coming to my own trading mental, how I manage my emotions, my discipline. And I think one of my favorite parts of this is the, if you look at this, it's the, I'll probably not find it because I'm on stream now, but nevertheless, it's the trader's death spiral. And I talked about the ability to reset. And I think that's the key part. That's the key part for me. And I think this is also very interesting. It's about bringing your A game, the mental game, the A game to the desk. Are you relaxed? Are you decisive? Are you patient, confident? Do you trust your instincts and your guts, versus being distracted, being risk averse, not having patience? And then the tactical side, clear understanding of context, clear understanding of location, of price levels, where you want to trade, where you want to do your business. But I think the key thing for me, and this is from a book called Mastering the Mental Game of Trading, is taking a trade, acting upon the trade, and resetting. And generally what you find is that when you're in this zone of where you're continuously taking trades and you keep losing, it's because you're not giving yourself a chance to reset. You're not following your system. You're not following your plan. And essentially what happens is you have like a trader's death spiral, which is eventually you're gonna stay in this loop until you just blow your account out, or you've suffered significant losses, 70, 80, 90% drawdown. And before you know it, you're loading your account up with more money again, and you start again. And you've got to get out of that habit. You've got to get out of those bad habits and have a real process about how you wish to trade as a trader.
I feel like having journaling to this extent, writing this down is such a nice way to just reflect on even what you've learned, what you don't want to do, what you do want to do. And it's interesting how many traders are still out there not doing something to that capability. And by the way, thanks for sharing that. That was just so everyone knows, TradingXO and I were talking about what we wanted to discuss on the stream. That was just totally, an organic showcase. So I think some people probably just got a special treat there, which was pretty cool. Now I do know we crossed that hour marker. We were scheduled for an hour, and naturally I want to make sure I give you those sort of a final word here before we wrap up. And especially thanks to OKX for putting this show together and bringing the two of us here to discuss markets and the educational aspect, especially. What are some sort of final thoughts you have before we wrap up? Charts, insights, wisdom, anything of the sort?
Yeah, I think I'll quickly cover this for a minute. So basically what I've used is essentially a range projection. So if you recall, if you look at the Bitcoin chart previously, where previously this would have been a level of a range high, okay? That would be a range high on a macro time frame. This would have been our range lows, taking the previous all-time high, price traded within this zone. So sometimes what I use is using range projections. This was the previous all-time high. This now becomes the mid-level. And then projecting this on a one-to-one scale, taking the low, taking the high, and extending it further. It's kind of like how you do like a fib extension. And this then defines a probable projected range as to where price could potentially head. This now becomes a range high. This becomes that key pivotal mid-level. And now you have you got your range lows, macro mid-range, macro range high. If you've got a break above this after the pullback and the consolidation, you don't want to fade this. And then within this zone here, I'm marking out another mid-range. And these are essentially how I mark out key pivotal points that I generally would like to see a reaction for price or possible objective targets. So that's one aspect. And that essentially leads me into something like this, essentially. Here's my current range that I'm using. You can see prices are now coming up to that 0.75 extension point where I suspect that could be a level of resistance before we see some level of pullback. You can see when price broke out previous week, traded into this mid of this zone here. So essentially trading level to level. The second point that I want to touch upon is PineScript. I think it's just a brilliant suite. And the beauty of it is, I'm not sure how to get out the screen, but there's so many various indicators that I can use in PineScript. And if you want to create your own scripts, you can use ChatGPT, you can use Perplexity. Just give it some human commands. Create me a set of moving averages that I can view on any time frame. So assume you've got a 200 weekly moving average, but you want to view that on the 4-hour chart. You can tell PineScript, you can code that up in PineScript with the use of ChatGPT. You can come out with some really, really great strategies. I'll give you a classic example of one that I'm using for a level of automation. It's that I'm trying to calculate the degree of the angle of a moving average. So if the angle of a set of moving averages is fairly low over a 14-day period, then that tells me that price is likely to be in a range-bound environment. If the angle of elevation over, say, the last 4 days has increased over various moving averages, that tells me that there's a possible shift into a trending environment, and I'm looking to create a system around that, which tells me, right, there's a fairly good chance that this now is going to see trend continuation and so forth. So just a very, very, very vague but high-level overview as to some of the ideas that you can use, and you throw it into ChatGPT. 3-4 years ago, if I'm trying to figure out how to calculate the angle of elevation on moving average, I wouldn't know where to start. But with the emergence of ChatGPT and Perplexity, you can come up with all sorts of things. I think, again, like I said, talking about the dynamic ATR bands as using them for stop losses, it would have taken me some time to figure out. That literally took me a matter of days now with ChatGPT to code up in PineScript, to backtest and create a strategy. So I think they're my two big points, is that I feel the way with the emergence of AI and trading, I think with enough playing around, you can really come up with some fantastic strategies, and thinking about removing parts of your discretionary aspects into somewhat semi-automated or automated aspects of trading. So that's probably where I'd like to wrap up.
I love that ending point, especially just from the aspect of, and thanks to some of these AI tools that, what previously might have taken weeks or months, or you'd have to take a full course, you'd have to really learn, how to build an indicator from scratch. You can really speed up your educational process by working with AI to sort of get the base code, or to run some concepts by it, to debug it. Obviously, it's never going to be perfect. It's never going to be exact. There's some skill you'll have to learn on your own, but just the speed of development just has been like enhanced 10x, almost feels like overnight. So I'm right there with you on that. And with that, ladies and gentlemen, I especially hope you all learned something new. I hope that you are walking away with some new insights about markets, about charting, and especially the educational component and psychological component that we touched up on the end. And thank you once again to OKX and TraderXO for joining us on this show. Be sure to subscribe, give us a like, throw a comment, and this show will also be live on TradingView, where you can follow OKX as well. We've got a link in the description as well as in the live chat at the moment. And thank you to our over 1,500 live viewers who popped in throughout this broadcast, and the almost 200 concurrent viewers who are still with us. We will see you all next month. TraderXO, thanks a lot for joining us.
Thank you very much.
We'll see ya.